Good evening, depending where you are. It's time for the Investing Weekly Report. So, of course, it's the third week of July. This was what happened for the week. As you can see, most of the sector ETFs and the main indexes were down, but we did have a couple that did really well. Energy was up 2%. That was the best one. Financials were also up. Industrials were up. And real estate was up too. So this was how my actual portfolios did. So the only positive one was the Roth, which is Noble and SPYD, which you can see all those numbers were positive. 2023 ranking was the best, and it beat the index for both Noble and SPYD. And then even the 2022 ranking was also better, but they were all positive. Then this was the check for the current buying list. Some went down, and then actually most of these ones that are still red went down. But a couple moved up. ADP went up quite a bit, and Essex went up. Of course, real estate was up, so that's not a surprise. And Cisco went up, and SPYD, we moved from the only red stock turned to purple. So purple is just for stocks that are up less than 1% or down less than 1%, and then everything else is green. So then we're going to check the actual portfolios. M1 Finance, this is the Roth and the Tira account. And so Roth, we got some more dividend cash, closing on $31 for the year. And you can see at the top there a slight dip at the end of the week. Year to date is 7.5%. Around 33% is from dividends, 66% from share price increase. And the single SPYD single stocks are catching up to the Noble ones. And of course, SPYD is much higher than Noble. And so the Roth, now we have two stocks over 40% return, two 30% return. And the rest in the top 8 are over 10%. We did have Verizon move down. I think PM was the one, Philip Morris, that moved into the top 8. And then bottom 8, we still have 2 that are green. Realty Income moved from being red to green. Gilead moved up a bit. No stocks are down 10% or more, which is good. And then we move to Tira. You can see that dip at the top. No new cash for this portfolio. All the cash seems to come in at one time at the end of each quarter, so won't see any cash coming in for a while. But the market gain, 251, we're up 13%. So it's a drop around 2%, I believe. S&P 500 part is 16%. Sector ETFs, 10%. And top 6, we've still got communication services and tech at the top. And financials have also passed S&P 500. But all of the top 6 are 20% or more. In the bottom, they're all green. 2 under 10%, 4 over 10%. That's what we'll take a look at. Interactive brokers. So this is the global dividend. So I think it dropped maybe $20. Towards the end of the week, some of the foreign currencies dropped, and also the overall global market dropped too, just like the US market. Here's the look at the share price return. And top 6, we still have the same 3 green. Pretty much no changes with the ranking where stocks are at. And then Euro, we can see it went up a bit and then it dropped. And the last day it stayed about the same. And overall, I think it dropped maybe 0.1%, around 0.20%. And we see this one dropped a bit, so it's up $10,000. It's down maybe $46, and we gained around $4 in dividends. Unrealized cash return for the shares still over $1,000 since December last year, but for the day we lost $60. So I think almost all the weekly losses came in the last day, which was the Friday, last day of the week. PSX moved back in the top 8. Some of the sectors had a bad week, so PSX was able to come back because of that. But their percent up is only maybe 2 or 3%. And then bottom, we have 1 actively buying company PPG that dropped down the bottom 8 again. And the usual companies, Satch dropped down here. They cut their dividend 27%, so they're going to drop. And we get to the news. So we did have some dividend news. PPG raised their dividend by 4.6%. So they're in the Noble index, so they often raise or keep their dividend the same. So it's not a surprise. So then we get to the actual portfolio news. Of course, the orange, I started putting the numbers of the return so you can see not just the news and that I hold the company, but also you can see what percent is the unrealized return, the total unrealized return. So orange is if it's in the interactive brokers, and then blue is if it's in M1 Finance. Some stocks I have in both, so you'll see two numbers there. But we start with the S&P 500, which we have 20 and 28% return. So it says data indicates that there's little potential for appreciation. That's analysts' prediction. They don't believe there's a lot of room for return right now based on the price. And then money flows into all sectors except industrial. So 10 of 11 sectors saw money come in. U.S. business bankruptcies hit highest level in 14 years. So that's, we got the materials sector ETF tagged. But I think that affects the whole S&P 500. And then BlackRock says actively managed ETFs will grow to $4 trillion by 2030. So that's good for all the ETFs you hold. The company highlighted in the report was JEPI, which is JP Morgan. And then the energy ETF, so we're up 8 and 13%. $100 oil, this is analysts' prediction. So they're talking about will oil reach $100 again. One-stop shop for energy bull market. Crude oil rises as U.S. inventories fell for a third straight week. But as you saw, the energy sector ETF was up 2%. We have the financial ETF, 29%, 19% up. Wells Fargo is bullish on the banking sector, so that's of course good, and they had a good week. And then this is the healthcare ETF, 12%, 13% up. A strong way to benefit from aging and unhealthy population. So this is talking about U.S. We have a growing older population, and a lot of people tend to be unhealthy. So that's bad for those people, but good for healthcare. So that's what that article is about. And then we have utilities. This one's up a little bit lower, 10%, 8%. Analysts say Supreme Court's Chevron ruling may limit action on climate. So that could be good for some utilities companies and bad for others. So then real estate stocks post largest gain. So they had a really good week, and the real estate sector has been up 6 and 10% for me. And then the tech. So tech had a really bad week. This article is just about the tech bubble. Obviously, this last week tech was down 5%. But for me, it's overall up 21 and 38%. And then we get into the single stocks. So the first single stock is AbbVie, and that's up 18 and 19%. Big pharma rally after J&J earnings. So AbbVie is a competitor of J&J. So they were talked about in this article. And then these are the weight loss drug stocks with the most upside. So again, another positive article about AbbVie. And then we have Abbott Laboratories down 3.7%. That was one of the new companies I bought in December. And they've been up and down. Usually not down more than a couple percent, and then not up more than a couple percent. But they beat on revenue and beat on EPS. So that's good news. And they made the list of the least shorted S&P 500 stocks in June. They raised their outlook after the medtech information. And then double-digit device growth apparently is enough. So this is an analyst's article wondering why Abbott isn't doing better when they're making a lot of money. But sometimes you see that a company does really good on the balance sheet and does really good as a business, but Wall Street and investors don't feel comfortable about them, so it stays down. So then we have Citigroup, that's Citibank, up 44 and 35%. They beat estimates in quarter two, and they're planning a $1 billion share buyback, so that's generally good for investors. Citibank credit card delinquencies rate edges down, so that's also good. And then Citigroup's turnaround story taken a little bit more seriously, so they've had a really good year, and so now people starting to pay attention. And then we get into Chevron, down 7% and up 8%. Qatar Energy buys 20% stake in Chevron. And then Hess raised at Bernstein, saying failed merger closing would not doom shares. Chevron bought Hess, or had a merger deal a while back, and they still haven't completed it. Next Era Energy, NE, down almost 2%, up 27%. And Sustainable Powerhouse, fueling the future of AI, betting on the right clean energy leader. Fundamentals and technicals solid, but shares rally to fair value. So basically saying everything's good, but the share price is still pretty high, and so we're not seeing a big return. However, the stock was down 27% for me at the beginning of last year. I bought it in the other portfolio, and you can see it's gone up quite a bit from there. Then we have a lot of realty income news. This REIT is in the news a lot, and it's up 8 and 1%. So why this growth investor is coming back to the name, setting itself up for a great future, getting close to $60 per share, time to buy, probably best price for a great REIT. Top growth stocks ranked by Seeking Alpha, so it made a list of top stocks on Seeking Alpha, and then a lot of analyst reports, mostly positive. So then we get to One Oak, up 35 and 23%. And of course, both of these I think are good news articles. So 4.7% yielding. One Oak is gushing with potential. One Oak to expand refined products pipeline to greater Denver area. And then we have Philip Morris, up 14 and 16%. So they are investing in a new facility in Colorado. So a second article about companies making moves into Colorado. And then PPG, up 3%, down 7%. They beat on EPS and revenue, or actually they missed on revenue and beat on EPS. They beat on EPS by quite a bit, and then were down a little bit, $130 million. The target was $4.7 billion, so it's actually seems like a lot of money, $130 million, but it's actually low when you compare it to $4.7 billion. So, and then mixed quarter two results, expects flat, low single digits fiscal year organic sales growth. And I've got the SPG up 40% and 19%. So closed seventh straight session of gain. Most REITs advance on rate cut hopes. So that was around the middle of the week. They mentioned September cuts, or the Fed mentioned that cuts will probably happen in September. And then Simon Properties still in my portfolio, but not adding more. So then we get to Verizon. So up 10 and 12%. Verizon looking to sell thousands of towers. Announce a new Netflix streaming bundle. Feuding with AT&T over 5G service, and then sued by record labels for allowing copyright theft. So looks to be almost all negative news except for the streaming deal. And then we move on to 10% dividend yield companies that I'm no longer investing in. So we have Bain Capital up 26%, attractive buy with unjustified discount. So we're talking about it's been going down. And then BP up 51%, delay in energy transition could be costly and disorderly. BP awarded funds for green hydrogen projects, so mixed news there. And then we get to Energy Transfer up 27%. Another acquisition to fuel growth, so they bought another company. Files to sell 50 million common units for holders, so they're putting up more shares for people to buy. And then talks with Energy Transfer to fund Argentina pipeline, so pipeline expansion and favorable industry and political trends. So looks like all positive news for Energy Transfer. Then Rio Tinto up 3.7%. Most of this is related to iron ore. And then they appointed a new person to lead the copper business. And most of this iron ore news is negative: suspension due to wildfires, iron ore price slipping due to train derailments, and then reports 3% rise. So that's actually good news, but mostly bad news there for Rio. And then we have TPVG down 26%. I'm earning 19% yield on my latest buy. So this all depends when you invest. And then VALE, so down 11%. Bridge collapse, iron ore production. So they also have pretty negative news. And then I have some forecast changes, and then I saw in an email US dollar reserve chart, so I thought we'd take a look at that. Here's the forecast. Chevron moved from a buy to a hold. BP, someone added them to buy. Chevron had another move from outperform to hold. So you had two holds, and then PSX, someone added hold. VALE holds. FTR holds. And then knee hold and BP moving from outperform to hold, and VALE moving from outperform to buy. So now let's take a look at this chart. So it was an email talking about the idea that US dollars moving from reserve currency status. Just talking, it used to be 70%, and now it's 59%, but that may not be a bad thing. As you can see, euro is 21%, Great British pound 5%, yen 6%, and then other 10%. Kind of shows that there's more currencies available to be a reserve currency, and then the article actually talked about how that's not necessarily a bad thing. Having more currency is actually better. If you think about a farm, one farmer is getting great farming and the others are really bad, then eventually it's going to affect that good farm. And so if you think about US dollar as a reserve currency in a similar fashion, then it's better to have a lot of healthy currencies who are also reserve currencies than to just have one. It's better for the world too, I think.